What's going on, guys? Dylan here. Today we'll be getting to a ticker symbol analysis on the ticker symbol GME, GameStop. We are seeing stock price in the most important support level on the daily, weekly, and hourly analysis, guys. So let's waste no time into this price prediction technical analysis. Typically with these short squeeze kind of stocks, the weekly analysis doesn't give you a ton of perspective, but GME does break that trend, guys, as we have seen multiple confirmations in the past and in the future and currently. Stock price did have this incredible short squeeze, which the OGs do remember back around that 2020 time. Since then, we entered this clear range of this ascending support breakdown, right? We knifed down a measurable amount, 60% in around about 2 to 3 months. Since then, guys, we entered this very, very clear descending resistance being this upper level for this descending wedge. Stock price gets very, very tight for 2.5 years. You get down to this room where there's not a lot of room, guys. The spring is loaded. It has to either get this harsh movement down or up. And short sellers, they get squeezed out of their position. Every single one that was accumulating in this spot, and you did see a move from $10 all the way to 65. Seeing that erraticness in GME, stock price pulled down once, mini squeeze up, and then we entered another pennant wedge-like formation. This one being horizontal, just your typical pennant structure that's formed out for around a couple months. We got to the end once again, seeing this reoccurring trend within the apex where a move has to be made. And buyers do like the short squeeze within this, as stock price moved from not as miraculous, but $20 to a high of 34 for having a clear double top reversal with multiple wicks coinciding and the big bearish bar moving down. Since then, guys, stock price has just been really in a range. And that's the main thing we want to look at on GME weekly, guys, is when we don't have these tight structures, you just want to analyze the current structure. And what is stock price doing? We're moving from the floor to the ceiling. We're moving back down to the floor to the ceiling. A recurring trend. We're moving right back down to the floor from the ceiling, moving back to the ceiling, and back down to the floor. So now is the question, the very obvious question, right? Very simple technical analysis. Will we move back to the ceiling at that $34 level, guys? So as of now in the weekly analysis, we are seeing that we are having some, we did gap down, right? Of course, but we're seeing a lot of weakness being that in the past, when we did, get to the floor, we're kind of just grinding down, guys. So when you see a big movement like this, it does offer a potential red degree in reversal where, a bit of a harsh correction too fast, it can offer a quick bounce. And this is what we suspected in the last video, guys, and we currently are seeing that. But if you see some more downside to occur, guys, this could be a sign of potential this range breaking. But with that being said, we remain completely unbiased, data oriented, right? We just look at the data, guys. That's it. So we're at the floor. We're currently attempting to go to the ceiling, and that's all we need to take away from the weekly. Nothing more, nothing less. Also, this red to green reversal. But besides that, guys, we got what we needed out of the weekly analysis. Let's go move over to the daily. On the GME daily analysis, we have been following this very, very critical 29.26 support level, which we continue to mention over this time span, is that this is the inflection point. If stock price does break below this consolidation beat, this is the most critical level on the daily, right? The weekly, besides the ceiling and the floor, right? The range. It's just been such a critical level, guys. And to break this ascending support and flirting on this previous resistance turn support, right? This previous consolidation to this breakout, if we break 29.26, you could see more downside. And we have seen a very measurable seismic move down. Of course, there has been other factors that play into this gap down. This isn't only technical analysis, but stock price breaking down into the very bad news and earnings and all this stuff. This does add fuel to the fire. So with that being acknowledged, we understand that we're back down to the floor, mentioning on the weekly. So GME has had these big gap down scenarios, actually a lot more frequent than a lot of the other stocks, right? As literally, we just panned over just a couple months ago, guys. Stock price had a big movement up. We gapped up before crushing down, a very similar trajectory to what stock price is doing right now, guys. And within these gap down scenarios, each and every stock does operate differently, especially being a short squeeze kind of all stock. So with GME, guys, you really want to see the low of the initial gap down being defended. Being that these big gap downs, you typically see major volatility. In the low point is typically the area where, if defended, buyers can step back in and have that very big red to green reversal and have this relief bounce. If we go and mark up the low of that initial volatility spike down, being right over here, guys, you see that, right, stock price knifes down, We jamble around this level, chopping around very similar to what we're doing now, guys. We're chopping around a little bit. And as long as this low of days that, oh, sorry, not low of day, low of initial gap down day, as long as this low of the gap down day is defended, which it has been, right? We see the wick, no daily close beneath. Right here, we're very close to that daily close, but didn't quite break below. It did tease below it around 20, 30 cents with a couple of wicks, as we do see, but there was no strong close below this level, right? Within this level, this is where short sellers will reestablish their position. As when you have this dramatic movement down, guys, there's just not a lot of risk reward. Would you want to short when stock price is 40% higher, right, within these regions, or would you want to short in this area? It's just very simple technical analysis, and seasoned traders and short sellers know this, guys. So automatically we have to keep an eye on this low of this initial gap down day. That's what we mentioned in the last video. Anywhere over this level, guys, stock price can get that movement up, right? As of now, we need to see more candles form to see if this is a solidified bounce or is this a momentarily bounce and then eventually a retest of the low. But this is the very obvious level, guys, where we need to keep a very close eye on. It is the number one support level, hands down, on the daily analysis. So with that being said, guys, let's keep scrolling and seeing these prior gap down scenarios. As when stock price has this very measurable movement down, things change, right? This is a very liquid in the moment conversation, as we always say on the channel, and data points arise differently within certain context situations, right? We see over here another great example, right? Stock price had this big gap down day. We shoot down, boom, right? Within this gap down day, huge volatility, stock price knifes down, right? We set that low of day, low of the gap down day. Stock price crescendos down lower, grinding, 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 grinding. We get near that zone, we never break below, and a huge spike up, right? We run from this 1960 level to a peak of 2362, which is a, let's see, a 22% movement in price action since this initial gap down in roughly around 3 weeks, guys. So I wouldn't panic sell here. This is not the time to panic sell 100%. We're back down at this weekly range for, right? You would be biased if you say, hey, there's no weakness. There's clearly weakness, right? We gap down dramatically. We're at the floor, guys. We have to remain unbiased. That's our emotions aren't going to do anything, but we have to acknowledge, right? We're in this important support level. We do have weakness pushing into this, of course, as we knifed down in a couple of weeks, where in the past it was a very slow grind down, very slow grind down. Sellers had their way with this push down from the ceiling, but until this gap down low is broken at 2148, I mean, there's no reason to panic. As in the past, we've seen these historical trends where stock price rallies, right? Rallies after these gap downs. We could keep scrolling, guys, but it's not 100%, but it really is like a 70-80% chance that as long as this, gap down low gets defended, stock price can have a rally, even if it's, working its way halfway in between this gap fill, right? Say somewhere around this 50% retracement, somewhere over here, right around that 2650 level, we should continue to see some sort of a bounce. With that being said, there is a probability that we do come down and retest this level, perhaps sending a double bottom for stock price to move higher. But until this gap down day low is broken, there's effectively no wise spot for short sellers to get in and short the stock. So it's really the number one thing we want to keep in mind. Looking at the current daily candle structures, it's pretty choppy, guys. We really don't want to overanalyze this, right? We are seeing the bounce, some resistance from the sellers, but buyers are doing nice grinding back up. When we look in the past within these regions, it's very choppy, guys, right? And this continue to be trend, just chop, 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 chop. Right when you see some major liquidity, it starts its next movement up. So we'll be keeping an eye for that next major wide bar, signifying that if there is serious buyer pressure to eventually end up filling this gap, which we do have now, which we will mark up at this level. But until then, guys, you really just want to be patient. If you're stuck in this position and you're down, right? I'm not a financial advisor. Don't take anything I say. Take everything I say with a grain of salt. But I would not sell here, guys. Just wait for this low a day, right? We're only, see how much below that? That's another 7% down, right? If you want to be sizable, you'd wait for that $21 level to break because you don't want to get a wick out. As in the past, we kind of flirted around this level. We wick below, wick below, wick below, and then a big rally up. But you see, guys, from these levels, we can have a 32% move up, right? And to fill this gap, it could be a decent movement up of 31%. So I do feel that there is more upside to be had in the short-term perspective, but we do remain data-oriented, and we'll be keeping a very, very close eye over on the next weeks on this daily gap down low. As we mentioned, guys, on the daily analysis, stock price is prone to chopping around within this region. So we don't want to overanalyze the hourly, being a certain context situation. But we do see a very, very clear bear flag pattern, which is in nature a bearish reversal pattern where stock price knife down, setting that flag pull structure, accumulates amongst this tight channel. And if you get the break to the downside, you could see a revisit of these lows being 21.48. But with that being said, guys, it's not really the easiest spot to short. Stock price is literally just knifed down to very major measurement, right? If there is short sellers in a position, they've established, if they're wise, right, we're at the floor, guys. We're at this weekly range floor. So it's not the best risk reward, once again, centering back to the daily analysis as of now. So despite seeing this technical bearish sign on the hourly, you can't put too much merit in it. Also, we do acknowledge that if we do get the strong break over the top of this, you could see the inverse effect where we actually have upside continuation over that $24 level strong. We likely rise up higher, pushing 25, 26 bucks. But, if you follow GME on a very short-term perspective, keep an eye on this, guys. But once again, due to this context, we're not going to put as much merit into the hourly analysis. As we typically do, is each and every stock has a different puzzle, a different equation, and it would just be unwise to look too much into this as of now. So with that being said, guys, keep an eye on this daily gap down low. I know I sound like a broken record, guys, but it's the number one data point we can look at as of now, being this 21.48, a strong close below that, really being 21.25, 21.20, some measurable amount under that, a strong close. We could see this weekly range being threatened. And if that does happen, guys, this has been the floor for 1 week, 2 week, 3 week, 4 week, 5 week, 6 week, 7 week, 8 week, 9 week. You get the point, guys. It's an important level. So with that being said, if you found any value in the video, consider like subscribing. We will continue to make these price prediction updates unbiased, live, technicals as it transpires, guys. I hope you guys have a good day. Take care, trade smart, and peace.